Hello and welcome. I'm Gary from Mysteel Global, and I'm very excited to bring you Mysteel Global's first ever podcast from our studio here in Singapore. Have you recovered from Iron Ore Week yet? Our team were busy attending and presenting at a number of forums and seminars over the week. And of course, we enjoyed catching up with our friends from the market at networking events too. In this podcast, the big themes at Iron Ore Week 2018, I spoke to two members of our team right afterwards to hear about the main themes they took away from the event. First of all, I'll be catching up with Attila Whitnell, General Manager of Mysteel Global. Here we'll be discussing the impact of the shift towards using higher grade iron ore in China, and also how that's affected by the price of coke and coking coal. Next up, Lee Hong Mei, Head of Content at Mysteel Global, will share her insight on the much discussed topic of environmental policy in China and the impact this could have in the coming months and years. So let's begin. I'd like to introduce you to Attila. He spent the last 8 years as an international man of iron ore and steel, plying his trade as a commercially savvy analyst for Tier 1 market intelligence firms. Hello Attila. Welcome to the studio, Attila.
Thanks, Gary. Pleasure to be here.
So how was the week for you? How was the iron ore week for you?
Yeah, I mean it's pretty hectic, pretty busy as usual. We have all of our clients in town, all of the market participants from the global iron and steel industry. So as you can imagine, for one week only, everyone there's a mass influx into Singapore, and so it's a great opportunity to meet up and talk to all the individuals and companies that you don't necessarily get to see that often, and discuss market trends and what's happening and how it's impacting their profitability and their strategic decision making. So it's great. I mean, it's a great opportunity to learn more about how the sort of market trends are really affecting their current sort of business operations.
And on that note, have you spoken to anybody that has raised anything interesting, or have you been talking to a bunch of people and they've mentioned anything interesting that you think could really benefit our listeners?
Yeah, I mean, obviously, you know, I think a few things that have come up over the past week. You know, Mysteel Global held a industry breakfast with LME last Monday. We held a industry brunch with Bloomberg the Tuesday after, and really one of the key topics to come out of those meetings and at the Singapore Iron Ore Week Forum was this whole current situation of, you know, the sort of premium for higher grade iron content iron ore fines,
Right.
and really, you know, the market's sort of trying to understand, you know, is this a structural change? Is this cyclical? Is this going to be here to stay for the short, medium, and long term? And that was one of the key sort of discussion points on the agenda.
So we've heard that some of the bigger miners like Vale and BHP, they've expressed commitment to supply more of these higher grades. What do you think is happening over there?
Yeah,
I think there's a shift.
You know, it's obviously flavour of the month at the moment. You know, there's huge demand coming out of China for high grade Fe iron ore. You know, it's kind of a couple of factors that are really sort of driving this demand. One of the major ones that we keep on telling our clients through our analytics and our sort of insight services is that, you know, the current steel prices in China, domestic steel prices, are really enabling the use of high grade iron ore within the Chinese blast furnaces. So effectively, you know, higher steel prices generally mean higher margins for steel, and because there's a relative oversupply of iron ore at the moment, it's sort of suppressing the iron ore price, which keeps a cap on hot metal production costs. But really, it's the margin that we're sort of focusing on. But, you know, a higher steel price, higher margin, it does enable some steel mills to pay a higher price for iron ore, and obviously that benefits not only high grade but all grades of iron ore. But what we're talking about at the moment, which is the other fact, is it's what's really driving that premium for higher grade Fe. And when you do have, specifically in China, when you do have strong margins, the Chinese blast furnace owners want to maximize the efficiency and productivity of the blast furnace. So to do that, you need to use higher grade Fe with less gangue, acidic impurities, and so therefore you need less coke or PCI to smelt that iron ore and generate liquid iron. So those are really the two key factors that are really driving this demand for higher grade iron ore. I would say that the market has sort of forgotten about one other aspect, which hasn't really been taken into account. I'm glad you asked. So if you also look at the coke price at the moment in China, the coke price has a big determinant on what kind of grades of iron ore that you use in the blast furnace, and obviously with a high coke price, that means you have to use something, a raw material that is relatively easily broken down in the blast furnace. If you use a low grade iron ore, you're going to need more coke to smelt that iron ore because you've got more impurities that need breaking down.
Right.
Whereas if you use a higher grade iron ore, like I was saying earlier, you need less coke and relatively less sort of fuel to reduce that iron ore. So looking at where coke prices are today, they still remain relatively high compared to where we were a year ago, 2 years ago. So that's also another key sort of item on the agenda that's really driving this differential between the grades in iron ore as well.
So on that note, let's talk about pricing. So during the forum, it was mentioned by CISA that mutually beneficial pricing for both the mills and the suppliers will be necessary for the market. What are your thoughts on that, and where is this statement coming from?
Yeah, I think this is something that's really sort of been gaining momentum over the last few years. There's been a lot of talk about it, but finally there seems to have been some action.
Mm-hmm.
And we're very glad to be part of that action. I think what the governments through CISA have been seeing, thinking, and feeling is that China, the largest consumer of iron ore in the world, and that obviously it's fair and representative for a Chinese PRA, price reporting agency, to be involved in the pricing of iron ore, with well over 1 billion tons of iron ore being imported a year. So it's important for the Chinese market participants to be able to be a party to pricing a material that they consume so much of. Now, obviously, CISA are sort of well behind this initiative, and they have shown support for the domestic PRAs to be involved in this whole process. And really, Mysteel is ready to play a part in this as and when it's needed. We've already had some traction with some of our indices, with some of the smaller and larger mining companies in Australia. Mm-hmm. To name but a few, we've had some success in being adopted by BHP for some of their supply agreements. We've also been, and that's on the seaborne market. And if you look at FMG, we've been adopted for inclusion into their contracts on the port side basis for domestic sales. So we're extremely proud, happy to be supporting the market in such a way that we feel that we can provide transparency on iron ore pricing. It is a very competitive landscape. You've got well-established market peers who have been doing it for many years. Mm-hmm. Without trying to sound too salesy, Mysteel has over 3,000 data gatherers across China, and right. That enables us to collect more bids, offers, transactions of not only iron ore, but steel and other metals and minerals from the industry. So we really do have strength in numbers, and that enables us to gather a huge amount of data. And that really is Mysteel's unique selling point, and it's that ability to really dig deep into the market, find the data, and aggregate it together to come up with an accurate picture of what's actually happening in the market. And I think that's where our strengths lie, both on the seaborne market and the portside iron ore market. I think it's also worth noting, we have other complementary businesses that we have in Singapore as well. That we have Mysteel Commodity Services, which are both a physical and a derivatives iron ore broking platform. For the physical, one of the biggest in the world, and for derivatives, well within the top 5, which we're extremely proud of. So
they came in second, right? They came in second for the top lumps brokerage.
That's right. So at SGX Commodities Awards Night last week, the Mysteel Commodity Services, also known as Mysteel Singapore, took second place in top lump brokerage by volumes over last year, which is a great achievement, and we're extremely proud of that. Not one to blowing our own trumpet, but I mean most derivatives brokers in the iron ore market generally have a shelf life of 12 months from inception date.
That's pretty short.
Yeah, I mean it's quite a competitive landscape, and we've managed to keep the business going and growing for almost 3 years now. So that's another thing that we're extremely proud of.
Would you say that some of the factors that you listed earlier are key to you guys winning the best iron ore research house, with your 3,000 people gathering the data?
Yeah, I mean it's definitely, it's obviously a team effort. I mean, I know that phrase is banded around quite easily, but it really is. I mean, we've built such a fantastic team of experienced heads and young graduates as well. And we're incredibly lucky. I mean, to name but a few, we've got Lee Hong Mei, who comes with a wealth of experience and, over 13 years in the industry as a top journalist in the iron ore market, working for the biggest names in the industry. We also have Russ McCulloch, who's got, I think, over 30 years experience in the industry. So, it's people like these that have joined Mysteel. They share the vision of growing Mysteel into something better, into a company and an organization that we all have this vision of what we want our company to be. And I think there's that responsibility and that ownership of it, because we are quite, not small in numbers, but we are quite small and sort of fluid in terms of the way we operate. And, we can cover any number of metals or minerals. We've got over 700,000 indicators in our database. Almost 200,000 of those are metals and minerals prices. And so, Hong Mei and Russ have built a team that have, built excellent insights and analysis into not only the iron ore market, but the steel market. And, we're sort of venturing into non-ferrous a little bit. Precious and minor metals. So the future really is bright for Mysteel, and we really owe a lot of that to Hong Mei and her team. She's got a fairly chunky team in Shanghai of 12 correspondents covering the market on a daily basis across all commodities at the moment, and they're growing. We've got over 18 months ago, these guys had no experience in the industry, and Hong Mei and Russ have worked so diligently to train them up to compete with their peers, and there's a lot of credit that is due there. So I think this award of Best Iron Ore Research House 2017 from the SGX, really pays homage to their endeavours.
I think that's all the time we have today. Thank you for coming down to the studio.
My pleasure.
Hopefully we'll see you around next time. Thank you.
Absolutely. Look forward to next year.
Thank you, Attila, and for giving such a great introduction to our next speaker, Li Hongmei. As Attila mentioned, Hongmei spent Iron Ore Week sharing her market knowledge at seminars with LME and Bloomberg, as well as attending many forums and events. Hello, Hongmei. How are you?
I'm pretty good, awesome. Finally finished the week-long event in Singapore, so that's quite reassuring. A lot of achievement as well, I would say. So it's a very pleasant and fruitful week.
So, over this whole week, it's been busy days for you. You've caught up with a lot of people, spoke to some contacts. So, how do you feel about this year's Iron Ore Week?
I find it very interesting, very different from last year. First of all, the forum, a lot more speakers, and then a lot more interesting topics to be discussed at the forum. A lot of people turn up as well. I couldn't remember exactly how many people turned up last year, but I feel that this year is full of people inside the conference, outside the conference, people talking to each other and sharing the information. So that's quite different and in a nice way.
You were saying that there were a lot more interesting topics this year. Could you highlight some of the topics that you found to be interesting?
Of course, one of the topics people are talking about is about China's pollution control, what it's affecting the steel industry. That's one thing. Another thing is because of the pollution control, what it means to the iron ore consumption pattern. I would say the two main themes in this year's Iron Ore Week as well as at the forum. A lot of people are talking about the sentiment, the policy environment, as well as the iron ore consumption pattern.
Let's start with the first theme that you said, which is the pollution control in China. Could you explain to us more why is that a concern for the market?
Last year actually was the first year China kick-started this winter restriction starting November all the way till March this year. And a lot of people were not so sure whether it will be the case again this year. So people trying to understand what it's like in the Chinese steel market. But after the forum, I believe everyone knows that it will be a policy to stay for the coming years. That's one thing. The other thing is that if you are pretty sure that pollution control will be there, then people will be starting talking about the steel output, the steel consumption, as well as leading to the second topic about the iron ore consumption.
Regarding the winter regulation you were saying, could you explain to me what is that?
The winter restriction is that during the winter months, basically from mid-November to mid-March the next year, a lot of blast furnaces, coking, as well as sintering facilities will be cut off the capacity. So basically it means that you can't really run at a full capacity. You can only run up to 70% of your full capacity.
So it's reduced capacity, not completely shut down.
Yeah.
And how would that affect iron ore consumption?
The good thing and the bad thing to the market is that the good thing is that steel supply will be reduced because of the capacity cut. And the good thing about environment is that your air quality is better because the sintering and coking are the most polluting sources of the steel making. So you cut down on those capacities, which means that definitely you're contributing to better quality of the air. But at the same time, you need to find alternative ways because without the sintering, you don't need the sintering feedstocks from iron ore market. And then which means that you need to put a lot more lump, pellets, and other sources of iron ore into the blast furnace.
Okay. Does it mean that there will be an increase of lumps and different kinds of iron ore sources?
You're right, in a way. Even if you're not really in the market on a daily basis, the good thing is that which means that the pattern of the consumption is changing towards higher grade iron ore consumption in general. Higher grade, it could be in the form of fines, in the form of Chinese domestic produced concentrates, or in the more expensive forms of lump and the pellets.
What kind of percentage would that be if you're talking about higher grade iron ore?
A higher grade, we are basically talking about anything at and above 60%.
Okay.
So we are talking about, basically we're talking about Australian iron ore supplies as well as Brazilian iron ore supplies. But among the Australian iron ore companies, like FMG, they are supplying a lot of products below 60%. So they have been suffering a bit from last year. They have to give a lot of discounts, very serious discounts, in order to make sure the customers still consuming the iron ore fines below 60%. But this year, at the forum, most of the people agree that because of the pollution control, China will consume, the focus and the shift will be towards a higher grade iron ore. That's for sure for this year.
Will that affect steel production, like the output?
It will not affect the steel production, but it will be affecting the pig iron production.
Okay.
Because that basically it means that you're using higher grade iron ore, but at the same time higher grade means more costly. So the steel mills will consume a bit more scrap whenever scrap is more affordable.
Okay.
So it's affecting pig iron. It's not really affecting steel.
So do you foresee an increase in demand for scrap?
Demand for scrap, starting from last year, there is an increase, that's for sure.
Okay.
But this year, I think there are several factors we need to take into consideration. First of all, the supply, whether supply is abundant. Second of all, whether scrap supply is affordable in comparison with iron ore. So there are a couple of factors, but if, let's say, we go into November again and the winter restriction comes along, which means that the steel mill, if they want to maintain a certain percentage of steel output, they need to consume scrap. So we can only for sure, starting November, the consumption will be more certain for scrap.
For the consumption of scrap, would that be a change in the way they produce steel?
They wouldn't. The scrap is more about the percentage, how much percentage you want to put into your blast furnace steel making process. So maximum you can put 20% in the raw material, but minimum you can put as little as possible depending on your cost curve and everything. So for now, most of the Chinese steel mills will be putting about 15 to 20%. So they are really running at high rate of the consumption for steel scrap.
Would there be enough domestic supply of scrap to meet the demands?
There will be if we just follow the pattern as last year, because last year we didn't really hear any shortage of scrap supply. But that means that if you maintain the similar pattern, one of the hot topics in the Chinese market nowadays is whether the China steel makers will install more electric arc furnaces. That is mainly consume scrap. For now, we haven't seen that, but in the longer term, whether that will be the situation. If that will be the situation, that will trigger more demand for scrap, and there may be some issues about the scrap supply in China.
Are we seeing an increase in electric arc furnace?
For now, we haven't really seen much difference, but during the winter curbing months, EAF producers are making the very best of the opportunity to produce as much as possible.
Okay. Lastly, I understand that Mysteel have received an award. Could you tell us more about that?
SGX actually just granted us an award for the best iron ore market research institution or company, as you put it, and only one company got it. That's us.
That's only you guys.
Yeah.
Congratulations.
Thank you. So it's really an honor and really a kind of recognition from the market that how well Mysteel has been doing to sharing the market knowledge and the data analysis for this particular market. So we are definitely doing the right thing, sharing the valuable information, more in-depth information as well to the market.
What do you think are some of the key factors that helped Mysteel get this award, get this recognition?
Okay, first of all, for example, we are doing a lot of index, like iron ore pricing indexes, but everyone else has been doing similar stuff. But what we are doing, a value-added service, is that other than indexes, we are sharing with the market what is happening behind the price movement. That part is really very niche market sharing and a very specific market sharing, as well as we are telling them why. It's not only about what, it's about why. So the why part is very valuable.
Could you give me an example?
Okay, like everyone knows that the Chinese steel mills are consuming more higher grade iron ore in the form of fines and lump. And then we can share how much exactly more from our database.
So it's more specific.
More specific, and at the same time, whenever there's a premium jump or premium decline, for 65 against 62 or 62 against 58, we will be able to explain the situation to them, whether it's because of demand, whether it's because of the supply, if it's about supply, whether it's from Australia or it's from Brazil. And then we are talking to the market every day, every night, every minute to understand what's really happening. Because we do have, people talking to each other on WeChat, on the phone, and via email as well. So we can get a hold of the latest happenings in the market and sharing back. And that is what we come in and then what we have been doing.
So your network is actually so vast that you have people communicating with contacts all around the world at all times of the day?
Yes, and also the funny thing is that because China is the core of the global steel market. So whenever something happens, the first question coming out will be, is something happening in China? So they will be approaching us, and then we know something is happening. And then we will talk to the other market sources to understand, especially those sources in China, which means that we can really act very fast to get out of the latest happening in the market and sharing in the first minute.
Okay. Thank you for your time and congratulations on your awards again. Hope you had a good week.
Thank you very much.
Thank you.
Thank you.
Thank you, Hongmei and Tila, for taking the time to share your thoughts on the week. I don't know about you, but I thoroughly enjoyed learning from the both of them. With potentially volatile times ahead, you want to track China closely. Am I right? Our mission at Mysteel Global is to provide transparency on the Chinese steel and iron ore market to the rest of the world. As Attila mentioned, we have 3,000 staff on ground across China collecting 700,000 market indicators. And our international team of analysts pick up the data and market developments with international relevance and delivers it through its English-speaking website, PDF, and data feed. The links should be coming up on the screen now, but we'd love to share more of our insight with you via social media. Follow Mysteel Global on Twitter, LinkedIn, Facebook, or Instagram. And of course, visit the Mysteel Global website at www.mysteel.net to take a trial of our award-winning services. Thank you for listening today. I hope you enjoyed the podcast and will join us next time. Have a great day.